Yo, hello traders, it's your one and only Forex skill coach Team Legend, and I'm super excited having you all here today on this one. You know how we do it in this channel. All I post for you guys are contents that help you win in the financial markets. So if this is your first time on my channel, could you do me a little favor? Smash the subscribe button and turn the notification bell on so that you'll be the first to get notified whenever I release a new content. Alright, so guys, today in this video I'll be talking about the significance of candlesticks. Alright, because I've gotten noticed that quite a lot of upcoming traders do neglect the candlesticks. Like, they just feel, man, if I've got support and resistance, Fibonacci, this, that, and that is, I'm good to go. You know, I just needed to understand that candlesticks also have a big role to play in the financial market, which you will always want to make sure that you take cognizance of. Okay, now today I'll be showing you a few examples, and then you just want to make sure that you go straight to your own personal chart and replicate whatever I teach you in practice. That's what makes you perfect, you know. All right guys, so now let us take a little example on this zone right now. Okay, now you get to see that in this zone we have quite some specific move of the market, and we can see clearly how the candlesticks reacted during this zone. Now, how do you realize, or how do you know when the market is about to turn? All right, this is one of the things you want to always consider when you're trading. You always want to know when would the market turn, like where is it going to turn from, because you know that's the idea you need. And once you're able to find out where the market might likely turn up from, then you might likely want to know what to do next. So imagine this as a trader that you are selling all the way from here. All right, I think I need to make this white so I can see clearly. Imagine as a trader you were selling all the way from here, and price got here. Now, as a trader who has ideas of the candlestick and the language that it speaks, like I always tell my students that the candlesticks are the language of the market. All right, the candlestick speaks the language of the market, and if you're able to understand the language of the candlesticks, you can easily understand the market, its move, how it moves, where it's gonna go next, and what it's likely doing. Okay, so now let me interpret a little thing for you here. Now imagine that I was selling all the way from here and selling, and I was observing all the higher highs and lower lows that were being created during this era. Okay, I'm looking for something like this. Okay, so let's say I was selling, all right, and price was busy creating the lower lows that it was creating until it got to the zone. Let me make that white so that we can see clearly. All right, so me noticing how price was moving, the bears were really strong in price. Now, number one, you want to see that the market was really strong in price movement here. Okay, the market was really strong in price movement, in the sense that we can see how the candles of the bears were really strong in motion. They were really strong in motion. The bulls pushed for a while and the bears pushed down with full force. You can see the strength of the candle. All right, you can see the strength of the candle. The bulls trying to show up and the bears kept on pushing and suppressing and pushing and suppressing. But suddenly what happened? Now this is where we get to talk about more other things. Now remember I told you, imagine that I was selling from here as a trader. Why would I be confidently selling? Because I can see that the bears are fully in power. Their candlesticks are strong. So number one, how you interpret the candlestick, how you interpret the market and know what the market is doing is when you see a candlestick that is very strong in motion, and you want to observe its size. You can see how big it was, how bold they are. You want to observe its length, how long they are. Then you want to know that the bears are really in power here. Okay, the bears are really what? In power. Comment the bears are in power. I want to make sure that a lot of you are understanding it. Okay, now you can see that the bears were really in power and pushing down massively. Now when the bulls try to show up, you can see that whenever they showed up, there was always a rejection, a massive rejection. You can see from here they pushed down and there was what? Rejection on that end. Okay, when they pushed, there was rejection. They pushed again, there was rejection. They pushed again, there was rejection. This is to tell you that the bears are still trying to take power. And now you get to see what happened here. We can see that at the zone, the the bulls failed to push again. Why did they fail to push? They failed to push because the bears are in the market. All right, and that's exactly what happened there. The bears were in the market, and that was why the bulls were unable to push further. Now, once you see a candlestick like this is what we call a doji. Okay, once you see a candlestick like this forming, it's trying to tell you that there's likely going to be a reversal. So let's say you are selling all the way from here and selling all the way from here till this new move began. Probably you must have taken profit, or it must have hit your break even, or whatever that must have happened, or maybe your stop loss is still far away. Now this is going to give you confidence to stay strong once you see this kind of formation. Now, number one, you get to observe the bulls push, the bears reject. I'm trying to interpret the language. Okay, the bulls pushed, the bears reject. The bulls pushed, the bears reject. Now at this time the bulls were unable to push higher. Instead, what happened? The bears rejected, the bulls pushed, the bears rejected, and price closed here, creating a doji. Now this alone tells me, with what I've seen here, why the bulls were pushing up, I already have the idea that the bears are in the market. One, two, this formation here formed, and that gave me another idea that, hey, the bears are likely taking power. That's number two confluence. Now you can see that I'm not even talking about support and resistance. I'm just talking about the candlesticks. Okay, number two confluence. You know, remember I tell you guys that your confluence is your confidence, right? Good. So now we've got two confluence, and on the other hand, then what we saw after this formation was a bearish candle. All right, a bearish candle, and then the bears started pushing to the downside, and with a full force. You can see their candle was massive. Their candle kept on pushing. The bulls still try to show up, but the bears kept on pushing. So at this time, as a trader, you must have looked for your entry somewhere around here. Okay, somewhere around here, and probably kept on riding. Now let's interpret what happened in this zone. Now, as a trader, you don't need somebody to tell you that, hey, something wrong is happening here, because once you observe and get to see that the bears who are pushing really strong, all right, see how strong their candles were, and suddenly you start seeing that the candles were choppy. They were very small. No strong bullish candle, no strong bearish candle. This is trying to tell you that, hey, you need to stay calm. If you are in trade, you need to start taking profit, because it's likely there's tendency that the bulls might likely push back up, because right from time the bulls have always showed interest in this price around here, and the bears kept on pushing because probably they still had enough strength to push. But when they got here, there was a massive range. All right, there was a massive range, and not just the range, but the candles were all tiny. The candles were very small, very weak candles. So this is a complete indecision in the market. So at this time, as a trader, you've got to be careful and keep observing what's happening. Okay, you've got to keep observing what's happening, and what you want to do is you want to drag out your rectangle like this. Okay, you want to bring out your rectangle and observe the length, the beginning to the end of this range, how it's moving. So you want to see where is it going to break out from and give you a retest, or all right, is it going to break out to the upside or to the downside? That's what you just want to observe. All right, get traders. So as a trader, me seeing these candles choppy like this has given me a language which I have interpreted, and knowing that, hey, there is something wrong in the market, and someone else might likely take power. All right, traders. So I'm trying to teach you the language of the market, the language of the candlesticks. Now you can see exactly what happened here, that after all this range, it was actually the bulls who actually took power again. And what happened when they broke out? There was a retest, and then they kept on pushing to the upside with even full strength. Now you get to observe what happened here. You get to observe that while the bulls were pushing up with full strength, the bears tried to push, but the bulls, their pushing was so strong. Their push was so strong. You see the bears trying to show up, but their candles were still small. The bulls kept on pushing with full force to tell you that, hey, the bulls really took power during this era. And if we can try to calculate probably from here, and we want to calculate all the way to here, there's about 33 pips, and that's quite a an interesting thing to grab out of the market. Actually, it should start from here to here where it stopped. There, 36 pips. Okay, so we can see that with this, with the help of the strength and the weakness of the candles, how they show up, we can interpret who is in power in the market and know what to work with. Okay, now we get to see what happened after the bulls pushed up. The bears trying to say, hey, no, we can take this shit from anybody. All right, the bears try to push, but their candles were weak. Their candles weren't as strong as they were when they were here. Okay, the bears, their candles were very weak. You can see all this were weakness of the bears. All this were weakness of the bears. So remember what I told you guys. When you see a range like this, you want to bring out your horizontal line. All right, you want to bring out your rectangle, I mean to say, and then you want to check out where is it going to break out from. And we can see clearly after all the range that happened here, what happened? You broke out here, retested, went a bit, retested, and pushed down. And what happened? The bears kept on pushing with full force here. The bears pushed with full force here. All right, but that is not enough for you to really enter into the market. Why? Because their candles are there's still a lot of wicks. So that brings me into talking about the wick rejection. Trader, whenever you get into the chart and you find out that there's a lot of candle wick rejection, you need to stay off the market. You need to be careful of that market. All right, whenever you notice a lot of wick, you can see a lot of wick rejections here, a lot, you need to stay off that market. You only want to trade in markets that gives you few little wicks and more body. All right, little wicks and more body, and not a market that gives you a lot of wicks here and there. It's trying to tell you that, hey, that market is really not so healthy. Okay, so out all the whole thing that were happening here was still the bulls trying to show strength. All right, the bulls were still trying to show strength, and at the end of the whole run, we can see how the bulls pushed really hard here without much wicks. They kept on pushing really hard. Okay, so let's take a look at a little example here. Now on this zone, we can see how the bulls pushed up with full strength. They kept on pushing with full strength. Now what happened here? When price got here, we can see a weak rejection. Now once you start noticing weak rejections like this, it's trying to tell you that you've got to start being careful. The bears must have entered the market from any angle, so you've got to be careful. All right, and if we take a little further, we can see what happened here. We can see that after this weak rejection was created, another candle was created, which was the bears. The bulls pushed up for a while, and the bears pushed down massively, creating this strong weak rejection. And this would tell you that, hey, the bears have likely taken power because their candles are beginning to get stronger in the market. And let's see what happened next. We saw the bears kept on pushing even deeper and deeper. So at this zone, as a trader, you've got to understand that the bears have taken power. All right, you see, this market is all about the bull power and the bear power. So you always want to interpret what the candles are telling you on time before you take action. So understanding your candles and what is telling you and having all the strategies in place is a good way for you to stand out in the market. I hope you got to understand something out of this, traders. Leave a comment below, like this video if you really find it helpful, and don't forget to hit the subscribe button and turn the notification bell. For the meantime, traders, stay safe and keep winning.